What's up, traders? Welcome back to the channel. We're going to go over Bitcoin and a few other assets for the weekly update. This is what we are going to be looking for going into next week, so make sure you stick around until the end. Right here, as of right now, I have Bitcoin pulled up on the chart. Today is Saturday, so this is not the end of the week. And since this is not the end of the week, we still have this week's VWAP. And as you can see yesterday, we did get that downside move that we were anticipating. We were looking for a liquidation run below last week's low. We got that move right here, traded all the way down under last week's low and spent several hours accumulating down there just above the breakout trend line. The breakout trend line comes from the old all-time highs that was put in December and the top side of the trend line put in January. And this is the area of which we have broken out. So it makes sense that it acted as support when prices traded back down into that region. Hence the reason why we were looking to be buyers here at last week's low. Now, since today is Saturday, we have very thin liquidity conditions, so the markets are barely trading. If you look at the 30-second time frame, you can see that. You see wicks on all these candles. That literally means this is liquidity provider action mainly, not a lot of volume being traded in today's range. Be very careful in these types of conditions because you can see big moves in both directions. Going back out to the daily time frame, you can see here that I have July's monthly range fibbed. And in my opinion, as long as we are trading above the midpoint of July's candle, this is a bullish structure. We can look at the VWAP, we can look at all the different metrics that we want, but no matter what indicator you look at, no matter what metrics you look at, this chart is still bullish and will be considered so until you are closing dailies beneath the 50% retracement of July's range. We look at the weekly here, you can see that Bitcoin is still bullish on the week. It hasn't made any significant move higher yet, so we don't know that it will, as the week is pretty much over, but we're going into a new week next week, and we have a lot of data points that could help make price extremely volatile. You have FOMC on Friday. We have a rate decision on Wednesday. We also have a GDP print on Wednesday. So we have quite a bit of high event risk information coming out. So we could see a very large weekly range going into next week. So needless to say, as long as we're trading above that 50, I think you should be a buyer on pullbacks. Be cautious, obviously. If you're trading under this midpoint down here, then maybe it isn't a dip buying situation. But once you get back above it, it probably would be, in my opinion. As of this weekend, we're not going to be looking for a big move in any direction. We're just going to trade the ranges as we normally do. There is something that could affect risk markets overall, and that is the Japanese yen. And a lot of people are extremely bearish on the Japanese yen. I'm going to pull up the USD JPY. Here I have the USD JPY pulled up, and you can see here we are trading at the 786. If we look at this trend objectively on the year, you can see we have opened, we set a yearly high, and we have trended lower. For the last 4 months, we have been trading inside of April's candle. That is a consolidation formation. If the yen is just stronger than the dollar, then you will see this pair decline. Now, our bearish invalidation would be above the March high. As you can see with this pitchfork, to give you the slope breaking out above the range highs would mean that this correction is going to be more shallow, and then our bearish thesis could be over with because we could be going back to test the yearly opening range. But if you are a trend follower looking at the trend, this is clearly a downtrend, and it is clearly a perfect trend trading opportunity to look for a potential short. As long as you're trading under this 786 retracement, which is the retracement for April's range, because that is the range we are trading in. You can see it acted as resistance here, it acted as resistance here, and here we traded above it and got 3 daily closes above it, but were unable to get bullish continuation, and then you cut loose to the downside. This is a support zone, so a bounce here is normal. Going into next week, I will be looking for a potential run up to the 786. We don't have to get back up there though. We could just open the week up tomorrow night and head lower. Don't try to short this thing a whole lot of times. Plan your entry and give your stop room. because if this trade idea works out and is correct in the future, you're going to be able to potentially set in this short for the rest of the year. If I pull this up on the monthly chart, you can see this is almost an absolute perfect head and shoulders formation with a neckline coming in right here at the 140.934. This does look like a topping formation to me. Since the Swiss franc has been trading up all year, this is your yearly open down here. You set a yearly low in February and it has been straight up ever since. Maybe we could see a little bit of profit taking from the Swiss franc and go into the Japanese yen. Now, I'm not going to kid around. This does look like a weak chart, and it does look like if you were looking at it from 2023 to now, it is a weak chart. On the 2025 yearly range, the range that matters, you are up, you are consolidating after going up. Now, obviously, this trade isn't guaranteed or anything, so make sure you are mitigating your risk. But if I am correct, this could be a pretty good trade. There are two other currency pairs that you can look for this trade to work out. Euro JPY, which you can see has been straight up pretty much all year, so maybe it is getting ready to come into an area of potential resistance. But I don't like shorting extremely bullish assets. I would rather short a bearish asset. And then on the pound yen, a bullish move for this month, but it is failing to get any kind of bullish momentum above the yearly opening range. As you can see, we've been above the yearly opening range now since late June and all of July, and have not been able to break above and get a clean rip above the October high. The cleanest looking setup is on the USD JPY, but the reason I could look for this trade on other pairs is because the dollar has been selling off so very hard. It is into an area of potential support. That support coming from an ascending trend line pegged from the 2011 lows and the 2021 lows. You can see we have already traded into that trend line, and it is trying to act as a little bit of near-term support. We go into a smaller time frame here on the daily. You can also see that we are putting in insignificant lows. Insignificant lows is just a bottoming formation. Now, it doesn't mean that this is going to be the bottom and I'm expecting dollar strength. I am just saying that there is an area here where traders will be potentially looking to take profits. So we could see the dollar go into a period of consolidation. So technically, to get the trade on the USD JPY, we don't need the dollar to be going down. We just need the yen to be a little bit stronger than the dollar. As of right now, Fartcoin, I like it to the upside as long as it's holding the 50% retracement of July's range. As you can see, for this monthly range, it is a trending candle as we have already taken out June's high. So we do have a higher high. Are we currently making a higher low? Now, we did see a little bit of downside here coming off from the highs, but we have so far held support at the 50% retracement, as well as the July VWAP, the volume weighted average price. So if this area holds as support, one spot 3172, then I would expect more upside. If the buyers are unable to get that upside going and sellers push it back under this 50% retracement and this trend line here, then I would be looking for downside on Fartcoin. And that's going to be pretty much my analysis standard across all alts and meme coins. As long as you're trading above your respective monthly 50% retracement, you have to give the respect to the upside, as the bulls are still firmly in control a lot of these assets. But on the weaker ones where that midpoint is in question, we can definitely look at it and keep an eye on it. Book of Meme is a very thinly traded asset. I would be careful with this one, trading it with size, but you can see that July midpoint is acting as resistance on the very near term right now. So it's anybody's guess as to what's going to happen in the future, but at least we have good technical levels to watch and manage risk by. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.